Okay, thank you everyone. Welcome to this meeting of East Cambridgeshire District Council's Audit Committee. I'd particularly like to welcome those members of the public and press who might be watching via the live stream. If the live stream fails at any point, I will adjourn the meeting until the issue has been resolved, and if we're unable to resolve the issue, then it may be necessary to continue the meeting without a live stream. I'd also like to welcome Rachel Ashley-Corn, Chief Internal Auditor, and David Wriggler and Anastasia Luktan from EY, our external auditors, to the meeting. So that brings us onto the agenda. We'll take agenda item number 1, which is public question time. Patrick, do we have any public questions?
No, Chair, we have no public questions.
Okay. There being no public questions, move to agenda item number 2, which is apologies and substitutions. I think we have none.
That's correct, Chair. All committee members are present.
Lovely. Lovely to see you all. Agenda item number 3 is declarations of interest. Does any member have any interest to declare on any items on the agenda? You may also declare it at the relevant point. Hearing none. Agenda item number 4 is to approve the minutes of the meeting held on the 20th of January 2026. Members, is there any reason why I should not sign these as a true and accurate record? I'm happy to propose from the Chair to approve the minutes. Do I have a seconder?
Happy to second, Chair.
Lovely. Can I have all those in favour? That's unanimous. Thank you. Agenda item number 5 is Chair's...
Before you move on, and I appreciate that this is rather circular as it was last time, Minute 39 said that your predecessor stated that he would report back to the committee on the possibility of having a minute action log, as this would have to be agreed for all the meetings of council. I don't know whether there's any such report, but clearly because there isn't an action log, there is no other process by which I can raise this as an ongoing issue.
Councillor Dupre, an action log will be a matter for council, like, as you rightly say, because all committees would be affected. I'm of the opinion personally that it adds to officer work and that it's members' responsibility to pick out any actions, but if you wish to raise it at council, that would be the correct forum, and I'm more than happy to pass that back.
So
I'm not going to take
you're overruling the decision of your predecessor that he would report, that he would rule.
Thank you, Councillor Dupre. This is a matter for council, so if you wish to raise it at council, you may do so.
That's not the view of your predecessor.
Thank you, Councillor Dupre. That's enough now. Agenda item number 5 is Chair's announcements. So I would really like to thank Councillor David Brown for his years of service as Chair of the Audit Committee. He's done an excellent job. I'm very pleased to be following in his footsteps and to have him supporting as Vice Chair, so thank you, David. I'd also like to welcome Tracy Flack to the position of Principal Accountant. And on the forward agenda plan later, we can discuss this, but members will have received an email that suggests we will need to alter the dates of the 1st of February 2027 committee to the 19th of January. This is because of the backstop date and to facilitate adequate discussion of the final statement of accounts. But we'll discuss that under the forward agenda plan. I also want to give notice that from October's committee onwards, in accordance with our self-assessment action, pre-meeting training will be delivered by Rachel, and I encourage all members to attend those sessions. That concludes the announcements. Members, that brings us on to agenda item number 6, which is to receive the draft annual governance statement for 2025-26, and I welcome Emma Grimmer, Chief Executive, to present the draft AGS.
Thank you, Chair. As with the previous years, this committee has received the first draft as part of the process for finalising the annual governance statement. So this today will trigger the consultation process with all members of the Audit Committee, including the substitutes. Any suggested amendments or statements that are made will be presented back to this committee when you consider the final draft for approval. That's it. Thank you, Chairman.
Thank you very much, Emma. So can I remind members that questions at this point are for clarification, so any suggested edits can be raised in the debate or by email to Emma afterwards. Members, are there any questions of clarification to Emma on the AGS? Councillor Dupre.
Number 1, page 13, Appendix 1, Annual Governance Statement 2024 to 25. Should that be 2025 to 26? That's page 13 of the agenda pack, the running numbers.
Is that the appendices bit?
It is the final page of the report before we have the blank page before we start on the actual statement. The covering report lists the appendices at the end and says that Appendix 1 is the Annual Governance Statement 2024.
You are correct, Councillor Dupre.
So that should be 2025-26. Thank you.
Apologies.
And my other question is on outages of YouTube on page, the running number is page 19. So it's on Principle B, where it says at the top of the right-hand column, all committee meetings are streamed live to YouTube from the Council Chamber and remain on the Council's YouTube channel afterwards, which has increased accessibility to members of the public. There have been no technical issues reported to this year. So 2 questions on that. Question 1, does anybody proactively check the YouTube stream to ensure that it has captured the whole of the meeting? Or do officers just rely on members of the public or whoever reporting that there has been an inadequate live stream? And second question, if there has been, therefore, a technical issue during the year in which the live stream has failed, does that mean it was deliberate if there was no technical issues?
Emma, would you like to respond?
Through you, Chair. I don't know the answer to those questions here today, but I can come back to all members of the committee in writing after the meeting. I don't know the process for whether it's actually checked, but I'm happy to come back to members.
Members, are there further questions or clarification on the AGS? Stephen?
Yes, thank you. Just a couple of brief comments, which is I'm supportive of the process, which I think has worked well in previous years, and I like the presentational changes that have been made. You refer to self-assurance statements from service leads. Did you get a full set? And was there anything in there that was a surprise to you?
Through you, Chair, we did get 100% return this year from all of our service managers, and everything has been captured in the annual governance statement future for the year ahead. Nothing came as a surprise to the management team when incorporating them. So it's as we would have expected, the challenges that we're facing, that we may face.
Good to hear, thank you. One more question, and I know we're going to be consulted on the content and respond, but I think there's a point significant enough to pick up at this stage, which is on page, sorry, I get confused with the page numbers. I think it's page 32 of the pack, which is actually page 34 of the document. Regarding the accounts and audit process, I just think, in view of the level of criticisms that have been made in the previous year, which I know we're addressing and I know we're making progress on, but I just think in view of that, it feels to me like a bit of an omission that's not captured here, and I would sort of suggest at this early stage in the process. In saying that, Chair, I do know we are taking these issues seriously and addressing them, so I'm not saying that, but I just feel for completeness they should be captured here.
Through you, Chair, I'll reflect on those comments, and I'll work with you to see if we can update the narrative to reflect the action that was taken, which the last committee meeting you actually considered an update on where we were with those 8 recommendations. So I'll speak to the 151 officer and reflect that in this statement.
I think it would be helpful to bring it up to date for a final version. Members, further questions? There are none, so I'm happy to propose from the Chair to recommend the draft annual governance statement for comment by members, as is recommended in the report. Do I have a seconder?
Happy to second, Chair.
Thank you. Members, we now move to debate on the annual governance statement. Does anyone have anything to contribute? Hearing nothing. Therefore, we'll move to the vote. May I have all those in favour of the recommendation, please? That's unanimous. Thank you very much, Emma. Agenda item number 7 is to receive the External Auditor's Annual Report for the 2024-25 financial year. And I welcome David from our External Auditors, EY, to introduce the report. The report is for noting, however, of course, members are encouraged to make contributions. David.
Thank you, Chair, and good afternoon, committee. Starting on page 37 of the pack, this is our Auditor's Annual Report. National Audit Office Code of Practice for External Auditors requires us to produce an auditor's annual report. Looking through it, you'll see the messages are very consistent to the report I brought to the committee earlier this year. This report is supposed to be the public-facing report, and essentially, I guess last time I was here I was saying what we were going to do. This report just confirms that what I said I was going to do, I did do. I think the key pages are pages 42 and 43 of the pack, 6 and 7 of our report, which just sets out the key deliverables. So just as a recap, there was a disclaimer of opinion on the 24-25 financial statements. There was one weakness reported concerning value for money arrangements, and that concerned the Council's arrangements to produce financial statements and facilitate the external audit. At that point, the whole of government accounts work was not complete because we were waiting on the NEO to confirm whether they needed us to do any additional procedures. So although I had given an opinion, I hadn't given a certificate to formally close the audit. The NEO have just recently given that assurance, so we are now in a position to close the audit for 24-25. But more than happy to take any questions or go into further detail on the report.
Thank you very much, David. We now come to questions of clarification to the external auditors. Councillor Dupree.
Thank you. Question on page 59 of the bundle, which is page 23 of the auditor's report. Oh, sorry. Exhibit C. There is a graph underneath it. I'm wondering whether you could explain to me whether the earmarked reserves are the same as the unallocated general reserve.
So from an accounting point of view, they're both forms of usable reserves. For the earmarked reserves, that's for specific purposes, but it's down to the council's view as to what they move into that. So from an audit point of view, we will look at the movements between general fund into the earmarked reserve, but it's probably slightly different to what you see in the budgeting format, but I would expect a form of consistency. So it's where the council have identified plans or projects for the future that they want to put aside some of their general fund usable reserves in order to fund them.
Sorry, if I can follow up, if I may. What I meant was a kind of a presentational thing to the amateur reader, like myself, reading this. The Exhibit C is supposed to show the unallocated general reserve continuing to increase. What I can see is the earmarked reserves continuing to increase according to the graph. And I wonder if those are different things, whether that needs to be shown or explained differently, or if they're the same thing, whether one of those forms of words needs to be changed, because the only thing that's increased according to the graph is the earmarked reserve, which may or may not be the same as the unallocated general reserve.
Apologies, yeah, I understand what you mean now. So, yeah, within earmarked reserves, you'll tend to have specific amounts that are allocated and then other amounts that can be used for different purposes should the council take a different form of approach. I guess the way we present it is just the earmarked, but as you rightly say, within the narrative it kind of suggests actually the unallocated element of that earmarked is also increasing, but you can't see that from the graph, so I'll take that point away. Obviously this has been issued, but when we issue the next version of it, we can consider how we kind of show that within the graphs.
Thank you. And you've also got a typo within the wording of Exhibit C in that yellow banner. To meet the is the.
Thank you, Councillor Dupree, for that. Councillor Horgan.
I do, Chair.
Councillor Horgan.
But obviously I was waiting my turn. But thank you. Yes. Acknowledging that this report is a snapshot of the year ended 15 months ago. I think everyone's looking for some form of reassurance that things are progressing. So, and again, without asking you to commit to something which is outside of this report, but generally speaking, and again, this is a bit of a gut feel by you, I guess, will you expect that your opinions moving forward into what ends up being this year's report are going to end up with a more comfortable outcome in terms of your opinions, and if you want to say anything about how things have improved, we'd be very happy to hear them.
Yep, sure. It's probably no surprise that as an auditor, we're very much evidence-based, so I will caveat what I'm saying based on the evidence we've seen to date. So we reported some recommendations at the end of last year. The finance team, led by Jude, have looked at those recommendations. They've accepted those recommendations and they've set out what they are doing to address them. So that element of evidence is positive in terms of what I would expect. You know, there's kind of ownership and plans to address them. I guess part of the issues that we reported last year was the capacity within the finance team. So again, we can see that that has been addressed by the finance team. If we then look at the 25-26 accounts, I guess step number one is, well, were they produced ahead of the statutory deadline for draft accounts? Yes. So there was a set of accounts produced. So again, another little tick in the evidence box. The next aspect, I guess, from our point of view is the basic checks that we're doing on the accounts. Now, they're currently in process. I can't comment on them, but as soon as we have those findings, we'll obviously share them with Jude and the finance team. We've also raised, or should I say, we provided an opportunity for all councils to have a workshop where we kind of try to get into the detail and a little bit more depth from the issues that were encountered in the prior year. Again, the finance team took up on the workshop option and we've ran the workshop. That was good interaction within that workshop. I guess the final bit of evidence that I have at the moment is then in terms of we raise our working paper requests. And these, you probably run into the hundreds, there's quite a few of them. A positive sign for me is that the council have, or officers involved, have reviewed those working papers and asked questions. And sometimes I'll hear nothing until we start the audit and then we'll identify issues in the working papers. We've had some questions back from Jude and the finance team, which indicates, again, another positive tick, looking at the requirements where they're not quite sure or not quite sure about what we're asking for. They're coming back to clarify that position. So I think there's ticks in the boxes. Can I say the position is going to be better? Well, that is leading me to kind of expect that we're going to be in a better position, but until we actually start that year-end final audit, that's the kind of final bit of evidence that I'll then require.
Thank you. We remain optimistic. I don't know if would you like others, or can I? In the main pack, page 50, you won't need to look at it because you'll know the answer to this one way or another. Where you say that you've got some extra work to do in terms of the catch-up. Do you have any estimate yet in terms of days, week, man-hours, whatever metric you want to use, of the additional work needed that is required to complete the recovery work that's mentioned?
Sure. So we are currently completing a risk assessment of all councils in terms of what work is required to rebuild assurance, and then when, so that will then determine an estimate as to how many hours are required and then when we're able to do that work. So that's kind of in process at the moment. I think for this council, and what I should say is this is being requested from MHCLG. Two aspects. It's being requested from MHCLG because they want a picture across each individual council as to how close they are to full rebuild. They want a picture as to how much work's involved. They want a picture in terms of how much that is going to cost external audit to do that work for funding purposes from the department. So this data collection exercise, clearly we need it from our own point of view to work out when we need resources and what the extent the resources are. So we're doing this exercise at the moment. For 25-26, we're leading off of MHCLG guidance in terms of what our focus should be on. So in terms of additional capacity, they're saying focus on those that are closest to full rebuild. So there's different categories. In 25-26, we're focusing on those that are closest. So there was a number that went to qualified opinions last year. They're the focus in 25-26. I think for others that don't fall within that bracket, they largely fall in that bracket because we weren't able to complete all planned procedures even in 24-25, potentially the previous year. If I then look at East Cams, I was at East Suffolk last night, so I've got my brain. If I look at East Cams in 23-24 and 24-25, we weren't able to complete all procedures. Now that's the first stage in the rebuild. That's what we call our natural rebuild. So for East Cams, the focus for me is that 25-26 we finish all procedures, because that is a huge step in the rebuild process and then makes that historical bit a little bit more straightforward to pick up the following year.
Thank you. Just one follow-up on that, if I may. On the next page, on 51, you talk about delays. I'm just trying to get a judgment call here on the amount of your work that was affected by delays. In terms of percentage, you'd be talking 5%, 10%, 50% of the delays you talk about on page 51. How much of your work was affected by those delays, would you say?
I think that's difficult to put a percentage. I'd be plucking it out of the air if I was going to say that. I think probably the best source is to look at the report I brought earlier in the year, to look at the accounts where we didn't get assurance or we had partial assurance, because that will give you an indication as to the impact on the level of assurance that I was able to provide. And yeah, you could do some rough figures, I guess, on that in terms of a percentage, but I would be literally plucking a figure from thin air if I was just to come out with a percentage.
Thank you.
Councillor Lane.
Thank you, Chair. If we return to page 51, item 3, the explanation says working papers and requested evidence were not provided in line with the agreed timetable. How far behind the agreed timetable did we vary?
So the initial agreed timetable is all working papers provided before we start the audit. So we kind of missed that one. We say that because that's best practice in terms of running an audit. We obviously apply an element of flexibility, so if there is a percentage of working papers there that we can start the audit, we'll start the audit, but clearly at a point in time we will need those working papers. So we would have missed the first deadline, and obviously during the audit we were also unable to get the required working papers, so kind of missed a second deadline. Good practice, and what we'd be aiming for this year is before we start the audit, all the working papers are there, they've been checked internally, so we're ready to kick off with the meeting, with the audit.
So what you're saying is this is historical, but not as it is at the moment.
Yeah, no, this is all based on the 24-25 experience, not the current year.
Okay, that's fine. Let me take you to page 59. Second line. Council has a surplus savings reserve of 10.2 million. Are we saying that that 10.2 million is a surplus and has not been allocated anywhere within our budget?
It's probably a better question for Jude
Yeah,
in
this
terms
may be
of
worth bringing Jude on.
the reserves.
Surplus savings build up every year, so that's allocated in that reserve pot. So what will happen is from there it will be used to balance the budget. So that's it's a build up of the surplus savings every year. Does that make sense?
So you're saying that's working capital rather than a surplus?
It's not a working capital. It's a reserve set aside to balance the budget. So,
Stephen.
Firstly, thank you, David and Anastasia, for a very thorough and clear report. I'm sure a lot of hard work went into it. I have a question for David and a question for ourselves as committee, actually. So shall I ask? I'll ask the first one first.
If we stick with officers first, then we can have a debate afterwards.
Yeah. So on page 52 of our pack, and I think this links to Councillor Horgan's question, it says that we expect to raise a scale fee variation. The document is dated April, so here we are in July. Has this now gone away, or do you still expect to raise a scale fee variation? And if so, what is the scale of that? And depending on the answer, Chair, I may have a supplementary.
Sorry, apologies if I've said this before, I lose track of what I've said at each committee. So the process is that at the end of the audit we'll work out whether we've done whether we have overrun on the hours, which we did for East Cams. we then have to submit that to PSAA for them to determine. We're talking about 24-25 financial year. We then submit that to PSA. Now, previously, I would have included our figure in these reports with the caveat that it still needed to be determined. PSAA asked us not to include it until it had been determined, which is why it's now to be confirmed. PSAA run a fairly robust process in order to agree the scale fees. So there's a return that we have to submit. That's individual line level with hours, grades. They will look at that, they will benchmark it, they will challenge us, they will do a sample of file reviews to actually evidence that the additional work that we did do. That process is still in operation. So we submitted our figures back in February, March time, in line with their request. Clearly, they've got hundreds of audits that they have to do, not just for EY, for all the other different firms. There are some queries that I've seen in the last few weeks, of which East Cams hasn't been part of that query list. And that's either because they haven't got the queries to us, or actually there aren't any queries in relation to the submission. After that, they will then do a final determination. Sorry, part of the other process is they will write to officers for comment on the submission. What I will say, because what I've had in some committees is, from a budgeting point of view, that's not great for yourselves to not know what's coming down the line potentially in terms of a variation to the fee. What I do is send an email to Jude when we submit to PSAA, essentially saying this is the value that we're submitting. So Jude has an idea as to where the fee is from our point of view. What we don't know is the final determined fee. So I guess that fee is not going to get any bigger, potentially get smaller if they challenge or they benchmark it and decide that elements of it aren't in line with sector scale variations.
Thank you. Can we know what that figure is at this point? And taking it back a step, I'd like to understand that given you couldn't do all of the work that you intended to do because of the issues that you've reported, I don't understand why you've incurred additional costs that needs to be billed for. Presumably you actually saved staff time. So could you just help us understand why you incurred costs that needs to be billed for?
Yep, so part of the process with PSAA is they will ask us the areas that we didn't complete. I can't recall the figures off the top of my head for East Cams, but there will be elements there that will say we couldn't complete this, and that will kind of be a credit against the debits to work it out. What we found at East Cams and we found at other sites is, so we've got a budget to do a set of a certain accounts. So say it was debtors, we have a budget to do debtors. What we found is actually we used more than that just to get to the point where we couldn't actually do the work, because you have the first working papers, we start the work, we start to pick samples, we then hit issues because it's not something we can sample, so then it goes back to officers, it then comes back to us, we start the process again. So we essentially use up the budget, kind of getting to that point before. There are occasionally, and this is where we'll then build that into our submission to PSAA. So I don't know, say we're going to start debtors, and in our first conversation with officers they go, we can't support that. Then clearly we haven't done the work, and that will feed into the credit that we'll put alongside PSAA. But in a lot of situations we'll do as much as we can, but we've got a capacity in terms of the resources, so we use up the resource without getting the desired level of assurance that we were looking to get.
Thank you. I understand, and I'm reassured that the PSAA oversight ensures that in practice this will be a fair outcome. So I'm happy with that. As I said, Chair, I have a question for the committee, and I'll be guided by you as to when to ask that.
Sure, we'll do that in the debate first, all right. Members, further questions for the external auditors? I just have one, if that's all right. In terms of moving away from a disclaimed audit opinion, we're obviously at a point now where we've made some progress towards your 8 recommendations, and this may come into the audit plan as well. What's your view of how East Cambridge District Council can do everything we can to support a qualified audit opinion next year and complete the audit process for the previous year?
Yep, sure. So I think step one has hopefully already happened in terms of producing a good quality set of draft accounts, because if the accounts are robust and properly prepared in the first instance, then that reduces a lot of the back and forth and the work that we're going to need to do. Step 2 is then to ensure the audit is facilitated as efficiently as possible. So understand the working paper requests, deliver them ahead of when they're needed, be available for external audit queries, timely response of queries once we get into the external audit. So these are all the kind of things that we're seeing in those councils that are kind of ahead of the curve, if you like, in terms of the way they produce and facilitate a set of accounts and the audit itself. So, and that will then allow us to complete, as I said, I think a good result for me and for the council would be that we're sitting here January, if the meeting's rearranged, and I'm saying I've completed all of my procedures. This is the element of rebuild that I've naturally been able to do as part of those procedures. The gap we've got is down to these 1 or 2 areas, which is very much linked to those historic gaps, so 22, 23, and anything in 3, 4, 4, 5 that's just kind of still not being fully pictured. Because at that point, you're challenging me to consider whether actually I've got enough to move to a qualified opinion. And that's the kind of first step in the level of assurance. Disclaimed, it's not great, is it? It's me saying I'm not going to form an I've done loads of work, but I'm not going to form an opinion on your statement of accounts. Whereas qualified is, actually, I'm forming an opinion in our accounts, apart from these few areas here that we haven't been able to complete all procedures. And I think that would be the first step in a positive direction to rebuild assurance here at East Cambs.
I think that's our target, and I think we as a committee should do all we can to support our officers to achieve that. Members, we'll now move to the debate on the External Auditor's Annual Report. I've got Stephen.
Thank you. Page 58 of the pack has some narrative about savings plans and the medium-term financial strategy. The second paragraph, and in particular the second half of that paragraph, has some quite strong messaging about medium to longer term financial challenges that may be ahead. And notwithstanding LGR, the Council needs to be taking steps to address those challenges. I think it's part of our terms of reference as a committee that there is onward messaging or recommendations to the Council or maybe Finance Committee or whoever it is, where we feel there's a matter relevant to highlight for their attention. And in my view, the messaging here is sufficiently strong for us to actually make sure that those in the Council responsible for financial management see this comment. So my suggestion, or perhaps question to the committee, is can we highlight this in our onward messaging so that this is actually addressed by the relevant part of the Council?
I think that's sensible, and we'll certainly take that away and raise it with the relevant people. Members, any other comments? There being none, so this report is just for noting. Are we happy to note the report? No. Thank you very much. Agenda item number 8 was deferred from the last meeting and is the External Auditor's Audit Plan for 2025-26. So David will now introduce the plan. This report is also for noting, but members can make contributions in the same way. David.
Thank you, Chair. So, moving on to the current financial statements, being the 25-26 financial statements. So this plan just sets out our work, again, in accordance with the NAO's Code of Practice and our requirements to cover external audit. Are largely focused on the key messages in the overview section, but more than happy to go into further detail if it's helpful to the committee. So on pages 75 to 77 of the pack, you'll see there quite a bit in terms of the context, some of which we've just talked about in terms of the sector messages from MHCLG, where we are in that plan. So if you remember, that's that 3-stage process that was put in place by MHCLG. The first stage was just a reset, so that was the introduction of the backstop dates and just got rid of all of the old audits that hadn't been completed. We're kind of now into that kind of rebuild recovery stage where we're trying to rebuild assurance as much as possible. The third stage we haven't really got into yet, but I think that's going to be the key one because that's the reform. So at the moment we're still working with a system that led to all these issues in the first place. The reform is where we should see the establishment of the local audit office, and that will essentially take over as lead for all of this. So we'll have one voice directing all of us, and I think that will be hugely helpful. Part of that also will be to look at the financial reporting framework. I think it's widely accepted that the financial reporting framework is too complex, which leads to 100-page plus financial statements. So CITFA have a programme that's already in operation in terms of how they are going to look at the financial reporting framework, make it fit for purpose, make it more understandable for anyone looking at those set of accounts. And I think that, again, will have a huge impact on the sector. So just a bit of context in terms of where we are in the process. On pages 78 to 79, we then set out our audit risks, or our areas of focus. These will be familiar, so pretty consistent to what you'd have seen in the previous year's plan. I think there's just a couple of changes or nuances I'll just pull out for the committee. So, where are we? On page 79, we have the risk around the valuation of your land and buildings and investment properties. Huge figures, lots of estimates, use of experts and stuff like that. And it tends to be a higher risk area. Nuance this year is that CITFA Code of Practice introduced a change. So there's now an application of indexation in the years that the assets aren't revalued. So just a case of, we'll obviously look at the indices that have been applied. Are they the sensible indices, and have they been correctly calculated? So there's just an additional procedure there, both for officers to kind of prepare them and for us to then look and make sure that's been appropriately adopted. On page 79, we've got the pensions, liability valuation, risk. Again, you'd have seen that previously for similar reasons as to why it's included. This is the first one since the March triennial valuation. So it kind of sets the baseline, if you like. For IAS 19 accounting purposes, they'll use the March valuation to form a base for 25-26, and then they'll roll forward for 6-7 and 7-8. So this is the first year. So we do some additional work on the triennial valuation just to give us assurance that that base position has been set. That work is done via the Cambridgeshire Pension Fund. Just sticking on 79, so we've got the application of IFRS 16. So that was actually implemented 1st of April 24. So you'll recall that was a 24-25 risk. And just to explain why it's still sitting in as a risk this year, that was one of the areas we couldn't complete full procedures on in 24-25. So we'll hopefully complete those procedures and find 25-26, which will then give us assurance that the council have correctly implemented that new accounting standard. Page 80 of the pack sets out materiality. Again, there are no changes to the basis or the calculation of materiality. We have decreased the performance materiality to 50%, so we can set it at 50 or 75%. This is essentially, you set an overall level for materiality, then we set a lower level which drives our testing. We can set it at 50 or 75. We set it at the higher where we are confident we're not going to find issues, because if we find issues we then have to reduce it. Clearly it's based on history, and because of the issues and the errors we found last year, we've set at the lower level. So essentially it's a higher degree of testing, which again, if we get positive results, we can then increase going forward. Page 81 sets out the value for money, as you'd kind of expect. Following the risk that we reported by exception last year, that kind of is a risk for us for 25-26. That will be informed by the 25-26 audit and hopefully the improvements we note there. I think the only other thing to pull out is later in the report we set out the timeline. So it's on page 104 of the pack. So as the committee is aware, the backstop timeline has moved forward 1 month for 25-26 to the end of January. For the following year, 26-27, it moves forward a further 2 months to the end of November. So you can see that the period of which the accounts need to be prepared and audited is now starting to get quite tight. As a result, we are looking to conclude, and this is across our audits, conclude the majority of our work by the end of November. Clearly some of the later ones will go into December, but we really need to be getting on to a 26-27 audits December, if not January, because if we don't start them until February, there's going to be a real squeeze getting them in by the end of November. I'm more than happy to take any questions.
David, thank you. It was very comprehensive. Now come to questions of clarification on this report. Councillor Brown.
Thank you, Chair, and thank you, David. Just on that last point with the tightening of the deadlines, having been around probably more years than I should have been, we've seen over fairly recent years a lack of capacity within external audit across the country. I'm not having a go at you here. Are you confident that external audit will be able to meet those tightening deadlines with the capacity that you have?
Yeah, I think that was recognised as one of the factors when they did the independent reviews. That, you know, I think it was linked though, because if you before the backstop for all of these audits, we just kept going until we actually issued an opinion. So what should have been a 2,000-hour job was finished in 5,000 hours. So although there was indications of auditor capacity, it was only because there was no end point for a lot of the audits, and there was audits that went on and on and on. What the backstop has done is kind of said, actually, you don't go on, you stop at that point, which means there is a confined time in order to do that. What I would say is the team I lead is the Cambridge team. We are the largest headcount and increasing again later this year that I've seen in my time at EY. So, you know, the resources are more than there. The budgets that we set aren't confined. We add in an element of flexibility over and above what we're budgeted to be paid for on the assumption there's going to be some additional work that we do. I think the challenge is getting it done by that deadline. MHCLG have encouraged all audit firms to bring in additional resources to try and start to rebuild. That rebuild program that I talked about for 25-26, so we have brought in thousands of extra hours to start to do that work. I think that will just not continue on a cyclical basis. I think it will just continue. So if we don't get it done, for those that we don't get it done for the 25-26, it will just roll forward and we do it, because obviously the rebuild doesn't have to align to when we do the accounts. It's historical. The information should be there, so we can do it at any point during the year. So there's a lot of effort and extra capacity being put in by the firms to kind of facilitate this improvement.
Stephen.
Thank you. Again, all good and clear. 3 questions, if I may, Chair. Firstly, page 88 of our pack. Your approach to auditing the pension side of it. Part of that involves assessing the work of PwC, one of your competitive rivals. How in practice do you assess the work of PwC?
That's a very good question. So this actually started in Audit Commission days. So there are 5 main actuaries that do all of the pensions reports for councils across the country. The Audit Commission took the view that if each individual audit team were going to those actuaries and looking at their processes, and it would not be an efficient process. So at that point, the Audit Commission commissioned, and I think it was PwC from the start, PwC actuaries to do that work, to share with largely the Audit Commission at that point in time, plus the firms that were involved. That process has continued into the new regime. So the NEO now commissioned PwC to do that work across each of the actuaries and then report back, and it's shared via the NEO. In terms of how we then rely upon that, we then get our own actuaries to review the PwC report. So they're not going back to the actuaries, they're reviewing the PwC report. They may raise a few questions in the process, and each firm will do this process. So there'll be one then review done by our actuaries to say, yes, we can rely upon the PwC, and they look at the people involved from PwC. Are they trained, qualified actuaries? They look at the process that they've documented it, and they do it in a way that's fairly systematic, that's then easy for another actuary to pick up and kind of follow. That report is then produced to each individual audit team. Ultimately, there will be a few local questions or local considerations to then just top up that assurance. So it's very much sector driven, but trying to be as efficient as possible so that each individual actuary and pension fund aren't getting asked the same questions by numerous different auditors.
Thank you for explaining that. I suppose the comment would be if any issues come out of that, that's beyond the council's control, not the council's fault. But thank you for explaining that. Second question is page 26 of your report, which is page 96 of our pack. Materiality is based on gross expenditure on provision of services. 41.7 million. I think that figure's changed slightly by the time the accounts have been published, so that just needs to be tweaked. But my bigger question is, why do you select gross expenditure on services as the source of this calculation, as opposed to, say, usable reserves, which is a lower figure at 33 million? And I think there's an argument that if there are changes that affect the actual amount of real money to spend, and therefore usable reserves, that's actually more significant. So what is the rationale for basing materiality on gross expenditure as opposed to the level of reserves?
There's been a lot of debate over the years of the basis for materiality. What I would say is there's an awful lot of sector comparisons. So if you looked at any local government audit, you'll see the same basis being applied. The auditing standards kind of give you a framework from which to determine what an appropriate basis is. The justification in local councils to use gross revenue expenditure is the view that that is the key figure that someone of the looking at the accounts would be interested in, because that will essentially drive how much you've got left in your reserves, whether budgets have been met. It's the spend that users of the accounts are going to be most interested in. That's not to say it's the only factor they're interested in, but that tends to be the argument. We have pushed before to see if we could go down a net asset basis, because so there's different measures you can use, but each time it comes back to the gross revenue expenditure. I think there's also an argument of consistency, because clearly if the basis changes each year, suddenly the materiality levels that auditors are using changes each year, and the level of assurance then kind of becomes a little bit more diminished.
Thank you. So what I'm hearing is it's sort of like a national standard rather than your own decision to take that number. So thank you, I understand. Yeah. Finally, on page 32 of your document, 102 of our pack, just to say, you know, obviously very pleased that yourself and Anastasia are still on the team. Just a question, is Irene, the lead senior, new to the team? And if she is, how are we making sure that she is up to speed on the council in such a way that doesn't impact too much on Jude and his team?
Sorry. That's why I bring Anastasia. Irene is new to the team, but to the role as lead senior, but not to the team. So she's worked in our team for 4 years now, I think. So she has experience. Clearly she'll be coached in that role by Anastasia and myself and the peer group within the Cambridge team.
Thank you. But she's familiar with us already, which is, I think, the main point. Yeah.
And she worked on the audit last year, so actually she comes with a bit of VCAM's experience.
Thank you, Stephen. Members, further questions? Councillor Dupre and then Councillor Alden.
2 questions from me. Firstly, and this returns to some of the questions that have already been asked. Page 107 of the pack. The rubric next to the graph in the middle of the page says, in our view, the council's progress falls behind the expected timescales set out in Larigo 1. Are you able to speculate by when you think that we will have reached the conclusion that Larigo 1 wants us to reach? Presumably that will be after we're merged into a new authority. And have you any idea how many, where we are in terms of the progression of other authorities towards meeting those timescales? Are we out there in the front of the pack? Are we lagging behind? Are we somewhere in the middle? Is my first question.
I'll take the second part of the question first. So we, EY have just issued a public report. I'm more than happy to share the link. It's been sent to Jude, so Jude can also share it with the committee members. And that reflects on our experience in 24-25 across all of our audits. So that table where we set out our assessment of the quality of the accounts, the quality of the working papers, that's mirrored for each individual authority. So that report is available. You can look at that and you can kind of judge where you think you sit. What we're currently working on is an addendum to help you do that judgment. So it will be a specific addendum for each individual council. Now, what we're recommending, and I said I haven't had a chance to catch up with Jude on this, but I've just sent in the link, and my recommendation is to bring that back to committee so you can kind of see that. you can understand that full picture, you can see where you are. If I, without having the detail in front of me, if I then say, okay, we've got 100 plus councils, we've got some that have moved to qualified last year, where we've finished all of the work in both of the last 2 years, and we're down to just a few areas where we haven't got assurance. We've then got some at the other end where potentially they haven't had an audit of the accounts for 3, 4, 5 years because they weren't able to produce accounts in time for us to do any work. So you can see that you're in neither of those two extremes. So I'd say very much at the moment you're kind of in that middle pack. But as I said, I think the report will provide that insight. I think the key thing is that as we move forward, we would hope that more councils move to the better end, and that pack is going to become smaller. So for those councils that don't kind of step up, then all of a sudden they will start to look more of an outlier, whereas at the moment they're kind of very much of a pack.
Thank you. And my second question of 2 is on page 116, on the depreciation of land. If that was an issue in 2023-4 and an issue again in 2024-5, why was that? Is that difficult to correct? Was it an oversight? What's happened with that? And are we expecting that that will be resolved by the time of the 2025-26 audit period?
Can I bring in Jude on this one?
Just to give an explanation on that, it was a piece of artificial football pitch, that was classed as a land. So that is why it was depreciated. We have fixed that for 25-26 now, so it won't be an issue for this year. Thank you.
So it's just one piece of land?
That's right.
Thank you.
Thank you, Councillor Dupre. Councillor Horgan.
Thank you, Chair. 2 questions. I'm pleased with the wording used here regarding our
Which page?
on page 75, page 5 of your reports, but 75 in the main pack, where it says our shared strategy to rebuild assurance, because I know that's something we all want to achieve. Looking further down that page, 5 bullet points. So actually because it is a shared strategy, my question is actually for our Section 151 officer. So of the 5 bullet points listed here, what confidence does our Section 151 officer have that his team can deliver these, and why?
We are confident this year compared to last year. We have enough resource in the team, and we've done all the work, the expectation from the EY. We had enough meetings with the EY to understand their requirements, and we are fully prepared for delivering the issues raised in this report. So I'm confident we will do a better audit this year. Thank you.
That's really good to hear. And my second question is actually for you, David. And on page 121 of the main pack, it talks about remodelling our MTFS to account for formula redistribution effects and send funding arrangements. And I was just wondering why it mentioned send obligation, because obviously that's an obligation of the county council, not the district council. So what do we need to do to our MTFS in respect of send, or if we need to do nothing? Could you explain why that comment's in there, please?
Yeah, I mean, this is a template appendices. You're just putting together key aspects, either in the regulations or the NEA. Clearly, it's for a council to look at that and determine which elements are relevant to them. Send clearly isn't relevant for this council, so it's not an element that I expect this council to be addressing.
So we haven't got to suddenly work out how the hell we're going to deliver some send obligation. You don't know how relieved I am on that score.
Thank you. So just to clarify on that point, you're saying that that's an NEO standard set of things you have to report on, and you just have to use that title.
Yeah, no, we don't need to put this in. I think what we've done this year is just trying to provide councils up and down the country with here's a summary of key legislation, key NEO documents that may be of use to you. So we're not kind of recommending that you use it, but it's more for information. And I've been in committees where this bit is relevant, and that's opened up a debate. So I think it's there to kind of help inform the council on what's out there.
Thank you. I'm going to bring in Jude.
Yes, thank you. Thank you, Chair. I have a question for David. I mean, what would you consider to be a good outcome for both EY and for the council at the end of this 25-26 audit?
That's a good question. I like positive questions. As I said, if I'm sat here at the end of the audit and I'm saying we've completed all of our planned procedures, we've got limited amendments to the accounts, then I think that's a huge step forward from where we were last year. Because that kind of gives myself and you as a committee assurance about the quality of the accounts that have been prepared, the quality of the working papers that have then been prepared to support those financial statements. And then it's kind of the first stage in the rebuild. We're then on that first step, and we can then focus on, okay, well, we'll do that again next year, but we also then add in the historic element in terms of the rebuild. So in my mind, that's my challenge to the team, my challenge to yourselves as authority. If we can get to that point, that's a good result. That will be a challenge, and I'm sure there will be issues that we identified during the audit, but as long as there are issues that both of us can mitigate without too much additional effort on both sides, then it won't impact the overall kind of opinion and our ability to complete those procedures.
Thank you. Members, any further questions on the external auditor's audit plan? Okay, there being none, we can move to the debate. Is there any comments? Therefore, this report is for noting. Are members consented to note the report? No. Lovely. Thank you very much. I'm aware Anastasia has to dash off, so thank you very much for attending. Agenda item number 9 is to receive the draft statement of accounts for 2025-26, and I welcome Jude Anthony, Director of Finance, to comment on the report and any minor revisions. Again, this report is for noting, but members may make comments as normal. Jude.
Thank you, Chair. I'm pleased to present the draft statement of accounts for 25-26. The accounts have been prepared in line with the statutory deadline and reflect the significant work undertaken by the finance team. I would like to thank Stephen for his constructive feedback on the draft accounts. I would also like to draw members' attention to a minor formatting error on the page 140 of the agenda pack. The brackets shown against the reserve movements are incorrect in the published draft. This is a presentation issue only and does not affect the Council's financial position. The error has already been identified, and we will correct it before the final statement of accounts are brought back to the committee for approval. The report before you is for noting. The finance team will continue to work closely with the external auditors throughout the audit process, and the final statement of accounts will be brought back to this committee for approval before the statutory backstop date. Thank you.
Jude, enormous thank you to you and the team for preparing the statement of accounts. I know how much work goes into it. Members, we come to questions of clarification to the Director of Finance on the statement of accounts. Any takers? Councillor Dubray, I saw first.
Thank you. Back to something which was discussed considerably at our last meeting, which is on page 146 of the bundle, which is this old thing about cash and cash equivalents. Page 146 shows cash and cash equivalents as 10.4 million at the beginning of the reporting period and 30.2 at the end of the reporting period. The wording in this paper refers to that as a reclassification of certain amounts of money, but immediately under the table on page 146, it says that it reflects the withdrawal of short-term investments into cash and cash equivalents. Again, I'm an amateur here, but my understanding of the word withdrawal is that you take a sum of money from one place and put it into another. Reclassification means saying we called it that, but we're now calling it this. Those seem to me to be two different things. Could you clarify whether this is moving money around or whether this is simply saying money which we described as type A is now money type B?
Through you, Chair. Yes, last year, you're referring to last year, so I would like to go back to last year. Last year, we had all the investment in, some of the investment in short-term investment, like more than 3 months. So they classed as a different category for presentation purpose. So for 25-26, all this matured short-term investment all moved into a under 3 months investment. So that classed as cash and cash equivalent. That's why you see the increase in cash and cash equivalent. So it's we withdraw from the maturing investment and moved into short-term investment, like under 3 months investment.
So the money has actually moved, not just been reclassified.
It's basically, for the presentation purpose, it's reclassified as it's from a short-term investment to cash and cash equivalent. Because anything below 3 months is classed as cash and cash equivalents. Anything above 3 months are short-term investment. So that's what it has happened.
Yes, I understand that, but the word withdrawal seems to me to suggest moving money. And if money hasn't moved, just been reclassified, then I don't think the word withdrawal under the table on page 146 is appropriate.
The money has moved from the investment more than 3 months to under 3 months.
It's not a reclassification, it's a move of money.
I think we're going in circles a little bit here. So it's clearly what's happened is Jude has answered the question. It's been removed.
I'm sorry, with respect, Chair, I don't think he has, and I'm not being awkward. I'm simply trying to understand what has happened to this money. And I will therefore write separately to Jude so that he can give me a written
that was going to be my
answer that
suggestion,
will actually be helpful
because
to me.
this is a
Thank
draft
you.
statement of accounts, that we could make any suggestions like this later on. But I think Jude has answered the question. Members, further questions? Councillor Horgan, I saw next.
Happy to leap in with my single question on this section. I'm looking at page 172 in the draft statement of accounts, note 16, and in there, under the loans to individuals and private sector of £253, which hasn't changed from the beginning or the end of the year, which tends to suggest no repayments have been made, or whatever they've repaid, we've loaned out again. I'm just trying to understand, what is the term of the loan or loans under loans to individuals and private sector? How long is the money loaned for? And when can we expect these to be repaid, please?
These are the loans the council paid to the individuals to home improvements for like disability facility grants. So what happens is council put a charge on their properties. So when the property is sold, then we will get the money back from them. So last year we had some money paid to the money was returned because some of the properties were sold, but this year we didn't have any property which was sold. So that is the delay. So that is why the figures remains the same. Does that answer your question?
So I'll just check that I understand it correctly. Okay, so it's not like you've borrowed money from a bank and then you pay that back over 5 years. It's you only pay it back when you sell that property. So if you don't sell that property, you don't pay anything back. Is that correct?
That's correct.
Thank you, I understand.
Councillor Lay.
The question's been asked, thank you.
Stephen.
Thank you. Just a few points, but firstly, can I thank you for sharing a pre-publication version of the accounts, which I felt were a considerable step forward in quality from the equivalent point last year and the year before. And I could tell that a lot of quality control had gone into the documents again, more so than I'm used to seeing. So I just want to sort of record that I think this is a step forward. On page 180, note 24, trading operations, I noticed that business units has gone from surplus generating to loss making, and also that building control has been loss making in both years. I'd like to understand what's going wrong with business units and why is building control not improving?
Thank you. Through you, Chair. The business units, it's surplus because we do value the properties every 3 years. So this year, there's some of the properties that has been folded into that business unit category. So that has given us a negative 50,000, a negative undervalued revaluation.
So it's not a trading loss, it's a valuation adjustment. That's right,
yes. Building control, again, is a national issue currently we are facing, so it's a lack of income coming from building control is a national issue. Also, the staff cost as well for us is high due to the, again, it's harder to find any good building control officers. Those are the main reason for those loss for those last 2 years.
Thank you. I mean, given the amount of building work going on, I'm surprised to hear that. But it's a national issue, not a local issue. Okay. Thank you. Page 178, note 23, and I think this follows on from Councillor Dupre's question. Money that was categorised as short-term investments is now categorised as money market fund. Has that increased or decreased the overall risk of the investment portfolio?
Thank you. Through you, Chair. This is again a treasury management, following the treasury management strategy. We work on based on that. So the risks are not materially changed because we are following the recommended money market counterparties. So the risks have not changed. So we are within the control of the risk. Thank you.
Thank you. And I think it is a feature of this accounts that, Jude, I think you've done well in adding narrative to help the reader understand what's going on. But I do have sympathy with Councillor Dupre's point that it could be clearer what has happened here in terms of, is it withdrawing money from one bank account, paying it into another, or is it a classification issue? And that point's been made, and that's going to be addressed. So, but I think I have sympathy with that point.
Happy to take away and update the final version of this document if that's going to help the readers. Thank you.
I just got two more for me. Page 176. The Virgin Media ruling, I had some awareness of this back before I retired. I knew it was coming. And at this stage, we're unable to conclude whether there is any impact on the liabilities. But certainly, sort of 2 years ago, I was able to do a rough guess what the impact might have been on my own pension fund. And I feel sure that either you or others in local government have done a similar guesstimate. So could you indicate what sort of risk this might give to the council?
Thank you, through Chair. My understanding is still the Virgin Media under the NTL is still under review. There's no final conclusion for that. Potentially there will be some kind of risk to the council in the future, but currently we don't have any estimate figure or anything like that. So if there is anything, it will be a pure speculation figures. So thank you.
My advice would be to push whoever it is in the professional network for more information on that, because I think it is possible to at least guess what the liability is. And finally, all the way back to page 8 and also page 10, where both the revenue budget and the capital budget were materially underspent. Once again, and you've heard me raise this before, but I think this is the third or fourth fourth year I've seen a statement of accounts, and in each one, both the revenue and the capital sides have been materially underspent. And I think it's very helpful you've added a breakdown of that in terms of variances. But taking a step back from that and away from the technicality of the accounts, what is going on in the council's budgeting which is causing material underspends year in, year out? And I think I did request that internal audits look at that as well. But for me, this is the biggest issue in this document, and I don't feel we've got to the bottom of it.
Sorry, is there a question in there, or is that something for debate?
Yeah, what is going on in the council's budgeting which is causing material capital and revenue underspends year in, year out?
Jude.
I don't think there is any flaws in the budget setting process. However, there are a number. I've looked at it, and because you raised this last time as well with Rachel, and I can give you one example, good example for you to probably understand this, how it's been done. When the last year's budget was set, and for investment income, we estimated, thinking that we will spend all the money for capital program. So capital program delayed. It's not delayed. The payment we made was falling to the next financial year. So that gave us a surplus cash of 5 million for us to invest throughout the year. That generated extra income. So this was when we predicted, or when we prepared the budget beginning of the year. So this wasn't. We were assumed that we were going to spend all the money. So that gives us additional income. This is a good example for you to see. So that is. So we wouldn't have predicted that at the beginning of the year. So this is one reason I can tell you. So the budget's been prepared prudently to avoid any overspend. So rather, we have some underspend that makes slightly better position for the council. Thank you.
Thank you, but Chair, I feel there must be some more to it than that, and I'm not sort of satisfied on this point yet. I'm not sure how we can progress it, but there must be something fundamental with the budgeting process. We are underspending by millions of pounds every year. So either the budget is not reliable and it's padded with over-prudent estimates, or we are having an enormous amount of good fortune and luck every year. And
Sorry,
I'm not reassured by what I'm hearing yet.
Did you have another question?
Well, I don't. Yes, the question is what is going on with the council's budgeting process, such that we are having material revenue and capital underspends year in, year out. That is not normal in my experience.
Do you have anything more to say? Because that is the same question.
Same thing. I mean, if I missed the capital part, as a capital, I explained that's last year the programs we budgeted for nearly 16 million. We spent only 12 million. So the 4 million nearly 5 million has fallen the next financial year. It's not delay in the program, but it's just the timing of the payment. I can't see any issue with the budget setting process, and we've been doing same. And I know the internal audit, you asked for internal audit, it is in the plan for this year's internal audit to scrutinize the budget setting process and the budget monitoring report. So I'm sure something will come out if we want anything further than that. Thank you.
Are there any further questions or clarification on the statement of accounts? In which case we can move to the debate on statement of accounts. Do members wish to make any other comments? Hearing none? Yeah, it's just for noting. Members are of course reminded, because this is a draft statement of accounts, they're free to email Section 151 officer, and in that process throughout the year. So this report is just for noting. Our members continue to note the draft statement of accounts. Yes?
Aye.
Thank you very much. Agenda item number 10 is to receive the Internal Audit Annual Report and Opinion for 2025-26. And I welcome Rachel, our Chief Internal Auditor, to introduce the report and opinion. This report is also for noting. Rachel.
Thank you, Chair. So, as introduced, this is the Annual Internal Audit Report and Opinion for the financial year 2025-26. So, as your Chief Internal Auditor, I am required to provide you with an annual opinion on the Council's governance, risk and control framework. So this is under the CITFA Code of Practice and the Internal Audit Standards, and there are a number of things we need to include within that opinion. and how we need to inform that opinion as well. So this report today provides you with my opinion for that financial year. It also breaks that down a little bit more for you in terms of detail, and then provides you with the basis for that opinion within the report. So this should be a key source of assurance for this committee, and it should be a key source of assurance for your annual governance statement, which you've already received earlier today. So the opinion was quoted in that document as well. So just taking members briefly through the report, I think when I first produced one of these, the opinion was about a couple of paragraphs long. As you'll see on page 215 of your pack, page 3 of the appendix, the opinion has increased in length as we have had more guidance provided, more requirements from the standards as to what we need to factor into that opinion. So I will go through that briefly with you. So the opinion that I've given is of good assurance. So that is in line with the definitions in your internal audit charter, which you've approved as a committee, and is included for you in section 4.1 of the report. I'm pleased to give a good assurance opinion. Members of the committee will recall that this is consistent with the opinion from 24-25. And in 24-25, I had raised it from a previous opinion of moderate assurance. So I have sustained that good assurance opinion this year. And that reflects the fact that during the financial year and based on the audit work that's been delivered by internal audit, there have been no opinions below moderate assurance. You've also received no opinions of a high organisational impact, which would impact on that overall assurance opinion for the year. So within that box, I have broken down a little bit further for you the outcomes in terms of financial control, risk management, internal control, and an element around your key risks for that financial year. So one of the things that came out of the new standards, one of the areas that we wanted to further develop based on our external quality assessment last year, was to factor in key risks into the opinion. So we've just reflected on those, the key risks within your risk register during the period, and how internal audit has complemented that and provided assurance in those areas, and reflected on any other risks identified through other sources of assurance as well. So the rest of the report, as I say, sets out the basis for that assurance opinion. So it is primarily based upon the work of the Internal Audit Service, which I, of course, have reported to you throughout the financial year in the progress reporting. So you have a high-level summary on Table 1 on page 6 of the appendix, page 218 of your pack. This is broken down for you further in Table 3 from page 220 of your pack, page 8 of the appendix, which lists each of the audit assignments from your internal audit plan for 25-26 and the outcomes of those in terms of our assurance opinions in the 3 categories. As the committee will be aware, the majority of these have been reported to you during the year as part of my progress reporting. Anything that has been finalised since my last progress report to you is included in your next progress report, which is the next agenda item. So it might be more appropriate to take any questions on those as part of that agenda item, if that's okay. But they are included here in terms of the overall assurance opinions. Also included on page 221, page 9 of the appendix, is the outcome of the audits completed for the Anglia Revenues Partnership. So these are not delivered by my team, but I have included them as a source of assurance over those areas, and tried to give you the equivalent RAG rating based on their definitions as well. Again, I have included summaries of those for you in the progress report today. So we have delivered 100% of your audit plan for the financial year, so I am satisfied that we have sufficient basis to inform that opinion. And the internal audit plan was developed in consultation with this committee to enable me to give that opinion and inform an opinion on the Council's governance, risk and control framework for the purposes of this report. So the other thing that I do take into consideration is the action taken by management where we identify any areas for improvement. So Table 4 provides you with an overview of action implementation from audit reports during the financial year. Now, this Table 4 is a snapshot as at the 31st of March 2026, so I don't intend to comment on that further because you do have an updated position on that in your progress report as the next agenda item, and we have moved on from this. That one that was overdue at this point was reported to the committee at your last update as well. So finally, in the section 5, we report on the performance of internal audit ourselves, so how we've delivered your internal audit service, so you can take some reassurance around the opinion that I'm giving to you today and the value that we have added to the organisation throughout that period. So as I say, we have delivered 100% of the audit plan, so we've exceeded the target that was set for us. In Table 5, I have reflected on customer satisfaction. It's very important that we're able to satisfy the requirements of the council and that we're delivering value for money with each of the audits that we deliver. The questions here have been aligned with the internal audit standards to try and give some feedback and reassurance around the delivery of that work. So that summary provides the outcomes of the 11 surveys that we received during the year. And I'm very proud of the results that we've received there, which are very positive, and hopefully give the committee assurance around the quality of the work that we've delivered. Lastly, I do have to include in my report how we've assessed ourselves against the professional standards and our quality assessment and improvement plan. So details of that are provided for you from page 225 of the pack, page 13 of the appendix. So members of the committee will recall that during 25-26 you received the first external quality assessment of the Internal Audit Service. So I brought that to you in full detail. You had a full copy of the assessor's report. So that is the gold standard really in terms of quality assessment. So you have received that this year, which hopefully gives you some assurance around the quality of the work and the standards that we have complied with. So just as a reminder, we did receive the highest rating available in that we were generally conforming with the standards, which is the highest rating we had that was available. We did have some areas for further development. We want to continue to develop and improve, and also ensure we're in line with the latest global internal audit standards. I have provided as Appendix 2 to this report a table with the actions that we agreed in relation to the areas highlighted by the assessor and an update as at April 2026 for any of those actions that were relevant for East Cambridgeshire District Council. So there's further detail within the report on our compliance and the key elements and assurances you require from us during the year. But hopefully that's a walkthrough of the key sections, and I'm happy to take any questions on the detail, Chair. Thank you.
Rachel, thank you very much. We now come to questions of clarification for the Chief Internal Auditor. Members, any questions? Councillor Horgan.
Thank you, Chair. A couple of questions. On pages 216, 217 of the main report, it talks about or advises that 2 identified risks have been accepted by management, and they are the 2 bullet points. Just asking our Chief Internal Auditor to give us our views on the potential impact on ECDC as a result of this decision and the reasons given.
Thank you, Chair. Yes, I'm happy to comment on that. So both of these reports are actually included in the progress report in further detail in the next agenda item as well. So I obviously can expand further on them there if needed. Just to talk through each of them. So the first related to the accounts receivable audit. So we highlighted an issue around credit notes. When we selected a sample of credit notes, 2 of them had not been suitably authorised in line with the council's procedures. So what we identified was that there isn't that check before those are applied, that they have been suitably authorised. So what we recommended was a check within the finance team whereby an independent officer can verify that the appropriate approvals have been given before a credit note is processed by a finance officer. I appreciate the resource within the team. The decision has been made that actually that won't be taken forward, and that the cases that we identified were actually due to a lack of training of an individual officer, which has been taken forward. Of course, we have recommended it. It is an area we would recommend good practice. I would suggest, given the number of credit notes and the values, the risk exposed is relatively low, but obviously I can't give an overall assurance because it could be that tomorrow there could be a large credit note. I can't give you that assurance. But based on the testing that we performed, we haven't given a high organisational impact in terms of that finding. The second related to the processing of BACS payments. So just to expand on this a little bit, so as a process, the council produces a payment run report. I don't know if I'm using the right terminology there, but produces that from the finance system. That is subject to review by a senior officer who will authorise that and review that, and I think also pay particular attention to any high value items on there as well to make sure those have been suitably approved. That is then loaded into the BACS submission. And at that point, the same officer can submit the BACS report and sign it. What we would recommend is a segregation of duties at that point to ensure that an officer cannot input that report, add to it, amend any of the figures without independent review to ensure that it matches what was approved in terms of the payment report. So this is a recommendation we have made previously, and officers did decide to accept the risk. I have drawn it out within the report today to make sure that you're aware of any actions we've recommended that have not been taken forward. Clearly, we have suggested there is a risk associated with both of those areas, and we would expect to see those controls in place, but it is for management as to the level of risk they are willing to tolerate and mitigating arrangements that they have in place. So it might be appropriate for officers to comment on the mitigations on those.
Thank you, Chair. Yes, it was recommended to us, and we looked at the process, and as you know, it's a small team, and we have got more people to deal with everything we can. But for the credit notes, it's normally go through the service admin officer, then that's approved by the service lead, then comes to the finance for us to process. So it's always matched against the invoice rate. So we are clear about that. So we are quite comfortable on that side, and I'm content on that side. The backs, again, backs runs, as Rachel explained, it's normally checked, prepared by a junior officer and checked by a senior officer. So inputting into the bank, and we do the monthly reconciliation on all these things. So we will capture anything if anything goes wrong in that side. So again, I'm comfortable with that side for the time being. This has been going on for a number of years, and we have not had any issues so far for us to make any changes at the moment. So if required, we will definitely look into it. Thank you.
Just moving on to page 221 of the main report. Obviously, anything that has the letters ARP in, I'm very interested in those for reasons I won't bore you with. And initially, looking at the table there at the top of page 221, 3 of the 4 areas of compliance were adequate, reasonable, which is not the end of the world, but obviously there's one that's good and substantial, and we all would like to be in that category across the board. Now, moving on, and again, I don't want to preempt your next section, but I just want to check that I'm right in understanding that from the report and opinion stage through to the progress report stage, it would appear that you're happier to give a good substantial opinion across the board, or am I misreading that? I'm trying to understand if there's anything that we can ask ARP to do to improve so that all of the areas are, because I do note that in the next section, progress report, it talks about enforcement, whereas in this section, this item, it covers business rates, recovery of council tax, housing benefits, council tax billing, etc., etc. No, I see, now turning the page over, I see that they are all still in the amber. So I'm just checking why they're only adequate and reasonable, because I happen to know that at the end of 25-26, ARP over-collected council tax, for example, by £640,000 against our target. Yeah, so that was, in my opinion, a good performance, and yet it doesn't seem to be reflected here. Are we just saying that the process they use for collecting council tax isn't as good or substantial, yet the result produced an excess of funds over above our target? I just need a little bit of background to help me understand why there is a difference between effort and result.
Okay, thank you, Chair. So just to reiterate, so my team didn't deliver these audits, so these are not my opinions, so I've tried to keep that quite separate. So these are not opinions that I've given, these are the opinions we've received from the internal auditors who performed the work. What I've tried to do for you in the next agenda item, not wanting to stray across the agenda, but in each of those I have given you some bullet points on where all the recommendations that were made in relation to each of those audits. So if you were to want to follow anything up with ARP, hopefully that gives you some insight into where those recommendations and actions were. So for example, on the recovery of housing benefit overpayments and council tax that you just mentioned, the recommendations and actions to be taken forward related to it and the need for an exercise to undertake quality assurance checks on write-offs. So this is on the next agenda item, so page 245 of the pack. So I've just tried to give you those actions there so that you can understand where the recommendations were. On the first one, which was the green rated one, there were no recommendations. So I think hopefully that gives you some understanding of the difference there as well. They've given a good level of assurance, a good to substantial assurance. On the basis there were no recommendations. In all of the other cases, there are at least, it seems, at least 3 actions on each, 3 and 4 on 1, that are being taken forward. So that's the reason why they haven't given a full clean bill of health or green rating in those areas. There are also some where the actions remained outstanding from a previous audit. So again, that will have impacted on the ability to give that assurance rating. But hopefully that gives you a bit of an insight into where the areas for improvement were.
Thank you, members. Any further questions of clarification on the annual report and opinion? Stephen.
Thank you for the good and clear report. Page 225. In the table there, the third line, you helpfully maintain a fraud reporting mailbox. Were any frauds reported to that mailbox?
I can confirm, Chair, we didn't receive any referrals during 25-26. No.
Thank you. And follow-up question, how is this mailbox publicised? If I had a fraud report, how would I know how to do it?
Through you, Chair. So we did draft content for the council to include on their website. So I believe there is a web page on how to refer different types of concerns. And what we try to do on there is direct people to the right means, because I tend to find a lot of councils receive a lot of allegations that should actually go to the Department of Work and Pensions. So we try to just set that out at the outset, that actually if it's a benefits or universal credit related concern, it needs to go to DWP and not us. So we try to give that guidance. We also do an annual fraud awareness week where we do publicise the reporting tool as well as part of that.
Members, any further questions? Okay, we move on to the debate. Is there anything anyone wishes to... Actually, I've just thought of a question that I had, having now moved on to debate. That's very, very rude of me. Obviously, we've talked a little bit about underspending, but throughout your report, you're not, well, are you, to any extent, concerned about reductions in service provision or anything like that? Are you confident that the budget is being made full use of?
Thanks, Chair. So, yes, so there's nothing that I've flagged as part of any of the audits that we've performed in relation to that. Clearly, we haven't performed that budgetary control review that we mentioned earlier, so we will look into that in more detail at that point. But certainly, if we were identifying that the council wasn't complying with any of its statutory duties in any of the areas that we tested, or we felt that any of the objectives weren't being met, that's something that we would have flagged as part of those audits.
Thank you. We now move to debate. Do members have any comments? In which case, this report is also for noting. Are members happy to note the report? Lovely. Thank you very much. Don't go away, Rachel. You're still here.
Chairman, we've noted it, but we have discussed whether we should start endorsing things, and I think this would have been a good candidate for endorsement.
If I can, I accept your point. If I can leave that for the annual report discussion, because some of that has come up in the self-assessment, so we can consider that there. Agenda item number 11 is to receive the internal audit progress report. So Rachel will now introduce this report, which is also for consideration and noting. Rachel.
Thank you, Chair. So this is the latest progress update on delivery of the internal audit service. So as I've mentioned in the previous agenda item, the majority or all of the audit reports that have been finalised since the last meeting related to 25-26 audits that have not been finalised as at the time of the last progress report. So within the report is a copy of your 2026-27 internal audit plan from page 247 of the pack, page 13 of the appendix. Just to note, and apologies for the error in the title, it is the 26-27 internal audit plan, not 25-26. So you will see listed there all of the 26-27 assignments. As you'll see, a lot of those are not started at this point and you don't have any outcomes as yet. As we progress throughout the year, as in previous periods, you will see those being populated as we have outcomes of each of those assignments. There were no audits completed to final report stage at the time of producing this report, but we have completed or are progressing all of your Q1 audits. At least one of those is now at report stage, and we have made a start on your Q2 audits, so I can give assurance to the committee that we remain on track for delivery for this year. In terms of the reports that have been finalised, so these are summarised for you as usual in section 2 of the report from page 236 of your pack, page 2 of the appendix. So I will run briefly through these. I appreciate there's 6 reports plus the ARP report, so I won't go into them in great depth, but I'll be happy to take any questions. So the first related to the bank reconciliation. So this for me is one of the fundamental controls, and it's a reason that we test it every year, because without bank reconciliation we don't have any assurance over the integrity of the financial records. So we were satisfied with the controls in place. We were pleased to see that the monthly reconciliations were taking place as expected in line with process, and that all had been independently reviewed by a senior officer. So we have given a substantial assurance opinion for the control environment on that basis. We did identify during testing one error on one of the reconciliations where an incorrect figure had been used. Now, when we corrected that figure and put the correct figure in, it then resulted in a 0 balance, so there was no variance, so that gives us assurance there's no errors or issues. For us, that then reduced the assurance we could give on the compliance with the effectiveness of controls, because that reconciliation had been reviewed and yet it included an error. So it just reduced the amount of assurance we could give over the effectiveness of that review process. So we have been reassured that was an isolated issue, but we just made one recommendation around ensuring that that review process is robust and would pick up any issues going forward. The next related to accounts payable. So this is where we are making payments to creditors for goods and services that Council has procured. So again, it's the key area that we audit every year. As we have now been doing this audit a number of years, we have got to the point where we now alternate our coverage. So we have taken the audit of accounts payable and split it in 2, and we do half on year 1 and half on the other year. So we alternate those coverage, and that means that we can do larger sample sizes and do more of get more assurance on those controls each time, rather than doing the whole, all of the key controls every year with much smaller sample sizes. So this year we were looking at the segregation process around the raising of orders and payment of invoices. We also looked at creditor reconciliations and the BACS payment process. So in terms of the segregation of duties on the raising of orders and applying the thresholds within the financial procedure rules, we did identify one error where an order had been raised by an officer for £54,000 where their limit was actually £50,000. These limits are not enforced through the system, so where some councils may have an enforced threshold that's applied by the system, this is a manual check here at this council. So we have flagged that particular incident. It was the only case we identified within the sample, and I believe that is being investigated just to ensure that any such invoices will be, any such orders will be reviewed going forward. There will now be, I understand, a monthly check on any orders over £50,000 for that reason. As I said, we also raised the issue around the BACS payments. I won't go over that again, and the difference there. As I say, we would have expected that segregation at the processing point to ensure that the report that's being loaded onto the BACS submission is consistent with that had been approved from the finance system. So due to that, we are giving a moderate assurance for the control environment. That is an expected control that we would expect to see within the system. We have made 3 recommendations. As I've said, one of those has not been accepted by management. They will not be taking that forward, but we do have actions in place around the other areas that we have highlighted. The next related to accounts receivable. So this is looking at sundry debtors. So as I say, this is not reflecting any of the monies recovered around council tax and business rates, which is purely around the revenues and benefits system. This is just around sundry debtors. So here we were looking, again, we alternate our coverage each year so that we can do a deep dive into those controls. So this year we were looking at billing, debt recovery and write-offs. We were informed there had been no debts written off during the financial year at the time of audit. So there's no testing performed in relation to those write-offs, and that obviously gives us some assurance around the robustness of the processes. We did identify an issue around credit notes where, as I said, and again mentioned earlier in the last agenda item, that there was a lack of approval in the 2 cases that we looked at in the sample testing. So we did recommend, again, that there be that independent review and a segregation of duties around processing of credit notes. As already discussed, that action isn't being taken forward, but there's some reassurance around training and the prior approval that would take place as part of that process. In terms of recovery, we have confirmed that the recovery action takes place locally. So rather than having a centralised debt recovery service that monitors and coordinates debt recovery activity, it is down to local service areas to chase their own debts. Inevitably, that will result in some different interpretations of the debt recovery procedures and some inconsistencies. We did identify some issues with the timeliness of recovery action, and in some cases there wasn't evidence available of recovery action that had been taken. So we have made some recommendations around strengthening the recovery action that takes place within service areas and ensuring some oversight of that, which I understand is being taken forward with greater recording within the finance system of those actions and the timelines. So we have given a moderate assurance opinion for the control environment and compliance on that basis with a low organisational impact given the context around the debts and the lack of write-offs. The next is another annual report that we always do towards the end of the financial year so that we can cover as much of the year as possible. So this was around procurement compliance. So here we're looking at compliance with the Council's contract procedure rules and particularly the Procurement Act 2023, which introduced some additional requirements and expectations around the publishing of notices and so on. We did note that the Council hadn't had access to specialist procurement advice during the financial year, which we did consider to pose a risk, and we did identify some issues. For example, things like rolling contracts should not take place under the new procurement rules, and that's something that I think some specialist advice is needed on to ensure that we are fully compliant across all of the contracts that are in place. We did also identify some gaps in relation to the Council's contract register. So this should, for transparency purposes and in line with the requirements, provide details of all contracts that the Council has awarded and the details of those. So we did identify some gaps, as I say, and some areas where we would have expected contracts to be in place. Again, those have resulted in actions and recommendations which are being taken forward. So we have given a moderate assurance opinion for the control environment and compliance based on the testing we've performed this year and a medium organisational impact based on the implications of non-compliance. The next related to net zero. So this is an audit to give some assurance around how the Council is achieving its objectives in this particular area. So we were looking both at what assurance we can get around plans to support and reach those targets, but also outcomes delivered from climate change related expenditure. So we were really pleased to see the amount of information that had been published in relation to the Council's carbon footprint. Also the recent Pathway to Net Zero report that had been published has set out the forecasts for reduction of emissions and any risks and actions that needed to be taken in this respect. We also, as I say, looked at the use of funding, including grant funding that had been sought to fund specific projects and how reports to members had reflected on outcomes and what has been delivered from the expenditure in these areas. As an example, we saw reporting on the project for net zero village schemes, which reported on the number and types of projects the funding had supported, and also reflected the forecast savings in respect of this as well. So we were satisfied with the level of detail being provided in that area. So on that basis, we have given a substantial assurance opinion for both the control environment design and compliance and a low organisational impact, and there were no recommendations arising from that audit. And the last of our audit reports that are summarised for you on page 241 of the pack is the readiness for changes in waste legislation, which was relating to the requirements for the weekly food waste collections and the new national requirements in relation to separate dry recyclables and standardised collections. So here we were looking at the project management arrangements to ensure that the delivery of these new requirements we were satisfied with the project management documentation that was in place, including risk registers, logging of actions and issues, also a good communication plan and evidence of engagement with a range of stakeholders on this project. We have noted, of course, that the Council did not meet the original food waste requirement of the 1st of April in terms of the statutory rollout, but that was advised to defer appropriately and the 1st of June date was reset. The only recommendation we made in relation to this, which is more an action really to take forward for future projects, was around financial reporting, where we noted that the finance reports that were being presented from a project management perspective had not been produced directly from the finance system. So we always, of course, would want the integrity to ensure that we know that those are full and accurate and they've come directly from the finance system. What we've recommended is that the Council look into implementing a project code within the system that would enable a report to be run that could show expenditure directly on the project, which would then remove the requirement for any manual recording of expenditure on the project. And then from page 243, we have the Anglia Revenue Partnership reports, which, as I say, are produced by the Internal Audit Services delivering these assurances for us. So I have summarised for you each of those, the positive audit comments that have been received and any areas where recommendations have been made, and the assurance opinion that their internal audit teams have provided in each of those areas. So I don't intend to go through those in detail, and obviously if there are any detailed questions, I'll be happy to take them away and refer them to the relevant teams as needed. So also within the report is an update on the implementation of audit actions. So you have an updated position on table 2, on page 249 of your pack, page 15 of the appendix. So we've had 8 actions marked as closed and implemented since the last update to this committee. And at the time of reporting, we had 2 overdue actions, one of medium priority, one of low priority. I can advise the committee that the medium priority action has now been implemented, so we now only have 1 overdue action, which is the low priority action, and that relates to expanding on the key performance indicators that are applied for asset management. And we will, of course, continue to report back on that at future meetings. So I'm happy to take questions, Chair, on any of the detail of the report. Thank you.
Rachel, thank you. It's a very comprehensive report. We now come to questions of clarification. Members? Councillor Horgan.
Just one question, Chair. On page 245 of the main pack, this is again related to Anglia Revenue Partnership and section 2.46. Although it doesn't actually use the word recommendations, I presume the bullet points are recommendations. The final one, where it says the discount, disregard and exemption process is to be reviewed and strengthened. Appreciate that you're sort of getting this from a third party effectively. Is there any way you can get any sort of more information around what that entails, why it's necessary, and what have they observed as the need to improve what they're doing? You know, anything you can give us would be appreciated.
Thank you, Chair. Yes, so I can confirm, so based on the audit testing that they performed, they identified that not all exemptions, discounts and disregards had been fully reviewed. So from my experience with working with other local authorities, we would expect those to be subject to a regular review cycle, so to ensure that they're still applicable. So if someone's receiving a particular discount, are they still eligible for that particular discount? So what has been recommended is that there will be a strengthening of that process. So a working group has been set up which will review and agree and communicate when reviews should be instigated, and they will be using diary dates within the system to set up little flags that mean that when a disregard or discount should be reviewed, it would be subject to review by the relevant officer. So I'm more than happy to provide some further details via email if that's helpful, but hopefully that gives you a feel for the nature of the finding.
Thank you. Yes, please, if you could send me any information you've got, but just so that I make sure I'm understanding what you're saying is, it's not that they're not giving discounts and exemptions in the first place, it's that they're giving them and not checking when they may need to stop them. Is that fair?
Yes, that's correct. So we would usually expect, for example, with some of these, that there would be a provisional end date set. So that would then be subject to review. So for an example, it would be, so there may be single person discounts would usually have an annual review. So we'd ask people to make sure that they're still the only person in the property. And we obviously do other fraud tests on that as well. And there's some other disregards around things like students within the property. So we would expect that would be for a set number of years. So usually we'd expect a provisional end date to be set, at which point we would be asking, has this now changed? Have your circumstances changed? And to declare that, and then we would amend the requirements in the council tax bill accordingly. So it's very much around reviewing the eligibility, not putting it into place in the first place.
I can assure members that does happen. It's literally just happened. Stephen.
Thank you. A few quick points which I'll try and rattle through. Firstly, on page 237, I just want to say it is an extremely good thing that the bank rec audit had a good outcome. I agree, it's a very fundamental control, and that's pleased to see it. So my question actually to David is, to what extent can you rely on that outcome and perhaps reduce the amount of your own work on the bank rec side?
I agree. I think we had a finding and a recommendation around bank reconciliations last year, so I think this is a very positive outcome and a step forward. In terms of reliance, so the auditing standards don't allow us to rely on internal audit, and they haven't done for a number of years. However, we clearly look at internal audit's findings and use that as a kind of mechanism to provide internal control assurance, which then allows us to kind of take that assurance, not at the individual bank and cash level, but at the overall council. So, you know, not just that particular piece of work, but the whole picture of the internal audit findings, I think, is very positive for the council, and that is then reflected in our internal control assessment, which then drives additional risks across the external audit.
Thank you. And moving on to the accounts payable audit, I have two questions on this. One of the biggest risks in this area is a letter purporting to be from a supplier saying, we've changed our bank account, please can you make payments to this new bank account? And some councils have been stung by that. Did your audit cover that particular area about review of bank account changes, and if so, what was the outcome?
Thank you, through you, Chair. So this is absolutely a key fraud risk. It's probably one of the key fraud risks that we would include in a risk register. So on that basis, we did used to audit this every year, particularly when there was a lack of evidence, I would say, in East Cambridgeshire around some of these amendments. So we did make some recommendations, and those were taken forward. So since 2021-22, when a new control was put in place and we were satisfied with the outcome and the level of recording that was in place around these in the verification process, it's now formed part of that alternating coverage. So we actually covered this in depth last year, so we didn't include it in the testing this year. We will look at it in depth again next year. So if we'd had any issues or any recommendations last year, we would have revisited it, but as it is, we will look at it again next year.
Thanks, yeah, I'm happy with that. Page 238, paragraph 215. So going back to this backs payment issue, what I'm hearing is that a senior officer can authorise a list of payments and then a junior officer can change it, and that wouldn't necessarily be picked up. And I get the challenges of having a small team. I've run enough of them. But usually I would expect to see some sort of compensating control, that maybe the online banking would force additional authorisation above a certain amount, or maybe someone would check that the amount of payments actually processed match what was authorised. So perhaps a question for Jude about, are there such compensating controls in place?
Currently we are relying on these two checks we do beforehand, before it's put into the system for payment. As I said before, we have not come across any issues, and we are relying on the bank recs we do and the other reconciliation we do behind the AR, account receivable side of it. This is something I will take it away and have a look at it and see what I can do to come up with something to put some more control over it. Thank you.
Thank you. That was going to be my request, so thank you for that. Finally, Chair, page 240, the net zero audit. Rachel, did the audit look for any evidence that climate change expenditure that we've incurred actually led to measurable reductions in CO2? And if you did look at that, what was the outcome?
Thank you. Yes, through your Chair. So yes, so in the last paragraph, this is very much what we were focusing on here. So where we were looking at any grant funding, we looked at the reporting that took place and any savings, any outputs from that and the impacts of those. So we could see in a number of cases there is different projects. So I mentioned the Net Zero Villages scheme. There were some others that were mentioned specifically within our audit report, where there was details of what had been done and the expected forecast implications as well. So that we were satisfied that was being suitably reported and had been reported to members as well.
So, thank you. So any examples where expenditure did not achieve a measurable reduction in CO2?
Through you, Chair, I would need to refer back to the audit working papers to see if any were identified whether that was the case. I think from our perspective, we wanted to ensure that there was transparency around the reporting. I can't recall whether there were any that didn't deliver upon those benefits. Some of them were forecasts as well, because obviously it will take quite some time for that to pan out, and we're looking at activity in 25-26, so we may not have actually seen whether that's panned out in practice. What we were looking at more was around forecast implications for the council in terms of that as well.
Members, are there any other questions for Rachel? Hearing none, anything you wish to say in debate? Obviously the item is for noting, people are free to debate. In which case, the report is for noting. Thank you, Rachel. Are we content to note the report? Thank you, members. At this point, I will call a short comfort break, so we will reconvene at 6:30 by that clock. Thank you. Thank you. Agenda item number 12 is to receive and recommend to Council the Audit Committee annual report for 2025-26. And I will now come to Jude to introduce the annual report, which has been expanded for this year. Jude.
Thank you, Chair. The report before you is the Audit Committee's annual report for 25-26. It provides a summary of committee's work over the past year and demonstrates how it has fulfilled its responsibilities in overseeing governance, risk management, internal audit, external audit, and the statement of accounts. The report is presented as a good practice and provide full council with assurance on the important role the Audit Committee plays in supporting good governance across the council. Members are asked to recommend this report to the full council. Thank you.
Thank you, members. We'll come to questions of clarification. However, I'm happy to propose from the Chair to recommend the Audit Committee annual report 2025-26 to the October meeting of full council. Do I have a seconder?
Happy to second, Chair.
Thank you, Councillor Horgan. We now come to questions of clarification to Jude. Members, are there any questions about the Audit Committee's annual report? Stephen.
Thank you. I have two questions. 263. The fourth paragraph down is a summary of the sort of EY outcomes. My question is, if I hadn't been aware of wider Audit Committee business, I would take from that paragraph that, frankly, all was well, and I don't think that's true. So my question is, could we have another look at the paragraph and see if we can be a bit more transparent that significant improvements have been recommended and we are monitoring that, and at this stage we're confident that's progressing. So that's my question.
Jude.
Yes, happy to take away and have a look at it and update if necessary.
I think on the following page there is a list of the 8 recommendations as well.
That's what I thought as well. I mean, on the following page you will find all the recommendations and the actions taken for that. So
yes, I think that's helpful, but as a summary paragraph, which might be, or that some people might read, I didn't feel that went far enough. So that's my question. Can that just be looked at again? And secondly and finally, on page 265, there's 5 bullet points at the bottom there, the committee's effectiveness, good level of engagement by committee members at all meetings. My recollection of our discussion was that we didn't feel that. I think we highlighted that there were some meetings where some members didn't contribute, and we actually said maybe there was a training issue.
Lucky you. Carry on. Chair, my recollection was that we felt that could be an indication of a training issue for the committee. So I think that bullet point is written isn't a fair reflection of our conversation, and my question is, could that just be looked at again? Yeah, I think we're happy to take that away, and obviously one of the actions was to do with training as well, so we can implement that. Members, further questions on the Audit Committee's annual report? None at all? All silent? Okay, we move on to the debate if there's anything members wish to comment on. In which case, we bring us to the vote, and the recommendation is to recommend the Audit Committee annual report for 2025-26 for approval by full council, subject to the amendment that Stephen has suggested. May I have all those in favour? Thank you, that's unanimous. Agenda item number 13 is to receive a report into the service level agreement for procurement services, and Jude will now introduce this report, which is for consideration and noting. Jude.
thank you, Chair. As indicated in the internal audit report, thank you, Chair. As indicated in the internal audit report, there was we have had a lack of service support for procurement service. So that has been addressed. So this report provides an update on the Council's procurement arrangements following the end of the previous service level agreement with Cambridgeshire County Council. It outlines the options that were considered and explains why a new service level agreement with Northamptonshire Council was selected as the preferred solution. The new arrangement provides access to a specialist procurement expertise, support compliance with Procurement Act. Members are asked to note the report. Thank you.
Thank you, Jude. We now come to questions of clarification to the Director of Finance. Members, are there any questions on this item? Stephen.
Just one. This is very clear and very interesting and very good to know, but I'm not entirely clear why it's come here and what we're supposed to do with it. What part of our terms of reference is this fulfilling?
Sorry, I didn't quite understand the question. Sorry. Can you repeat, please?
It's not obvious to me why we...
Sorry, this is because it was raised in the internal audit report as we were in a moderate level of assurance, so we were not having... That's the only reason we want to bring it to the audit committee for the steps we have taken to rectify that issue.
We now move to the... Do you have a question, Councillor Debray?
Yes, I did.
Yes.
Just wondering how normal it is for a district council not to have its own procurement capability.
Is that a question for Jude or Rachel?
Question for whoever can answer it.
Go on, Jude.
Sorry, I didn't quite understand your question. Sorry, can you repeat, please?
Is it normal for a district council not to have its own procurement capability?
It's not normal. Some councils, they have, for example, if you take Finland, they have their own procurement officers within the council. For us, it's looking at the LGR and all the other things, the level of expertise we need to bring East Camps to a certain level. We thought it would be best to have a support similar to what we have for internal audit to address the issue. Thank you.
Can I bring in Maggie?
I was actually going to look to the internal auditor because I don't think it's unusual for...
Can I bring in Rachel?
You can, Chair, thank you. Yes, so from my experience with working with other local authorities, so as you are aware, I work with other district and borough councils. A number of my other councils do not have in-house procurement expertise, and they actually buy into a shared service. So I think at least 2 of them are part of the same shared procurement unit. So they then buy in that advice as needed from that shared service. So generally, so I'd say the nearest comparator to here would probably be Harborough District Council that I work with of my group. They do not have a procurement officer in-house. They used to, but they don't anymore. And they haven't for a few years, so they do buy in that advice from the Welland Procurement Unit as needed, particularly on big projects and things as well. So that seems to work well. I think it's difficult sometimes for a district to justify the cost of a full-time procurement team, particularly with the new requirements of the Procurement Act, which are quite extensive in terms of the number of notices and so on as well. Thank you.
I just want to add a comment, which is having seen councils that have in-house procurement and don't at district council level, in my experience, an arrangement like this would probably work better than having an in-house officer for some of the reasons Rachel has said. So pleased to see this.
Thank you, members. Any further comments in debate? Councillor Horgan.
Just that this obviously is very much like the shared service that we have for collecting business rates and council tax. And from my experience, that works extremely well, and I'm sure this one will too.
Thank you. Members, any further comments? In which case the report is for noting. Are we happy to note the report? Lovely. Members, agenda item number 14 is to receive the corporate risk management update, and Jude will now introduce the corporate risk. This report is also for consideration and noting, but members can make contributions as they see fit. Jude.
Thank you, Chair. Members are asked to note the revised corporate risk register as set out in Appendix 1. 3 risks have been updated with reasons for those changes explained within the appendix. I would welcome any comments or suggestions from members. Any feedback received will be considered and, where appropriate, reflect in the next review of the corporate risk register. Thank you.
Thank you, members. We now come to questions of clarification for Jude on the corporate risk management update. Councillor Horgan.
Yeah, this just may be a matter of wording, but I'm looking on page 276 at the top, risk B3, and there it talks about the establishment of a surplus savings reserve. that sort of almost suggests that that word suggests it didn't exist before, whereas it did, I believe. So maybe the word establishment is not correct to be used in that situation, or am I misunderstanding?
Thank you, Chair. You're correct, Councillor Hogan. I think this is it's a typo there. The surplus savings reserve was already established. This is an addition to the existing pot. Yeah, thank you. We will correct that for the next update. Thank you.
Councillor Dupre.
Risk A5 on page 280. The risk is the cost of living crisis impacting on the residents of East Cambridgeshire. I'm wondering why the likelihood of that is only 4 in the inherent risk and 3 in the residual risk, given the very real impacts that I think all of us as councillors are seeing on residents across the county. That's my first question. Do you want to deal with them risk by risk? I've got
That would
3.
be great. Thank you. Jude.
Thank you, Chair. So during our last review meeting, risk review meeting, it was decided by the officers that would be the appropriate score for that. I'm happy to take this away and discuss this in the next meeting if needed any changes. I'm happy to take that away for you.
Okay, thank you. My second question is about risk A8, and that seems to be an error in the inherent risk. 4 by 4 is 16, but it's down as an amber where it should be a red on the heat map. Page 282.
I will get that corrected for you. Thank you. Thanks for spotting that.
Thank you. And then risk B3. There's the reverse issue there where on the residual risk, this is on page 285, the residual risk is 8 and it's marked as red where that should be amber.
Yes, we will get that correct. Thank you. Thank you for pointing that out. Thank you.
Did you have further questions, Councillor Dupre?
Those were my 3.
Oh, thank you. Stephen.
Thank
Could
you.
I ask you to turn your microphone off, please, Councillor Dupre?
Page 287, risk C2. Two-part question. What is the rationale for reducing the likelihood from 4 to 3, given that cyber fraud is getting more and more sophisticated and all you hear is that the criminals out there are sort of outsmarting organisations' sort of capacity to deal with it. So what has improved to enable us to reduce the likelihood? And secondly, there was a disaster recovery exercise in February. Please, could we see a summary of the outcomes of that and what were the key learnings?
Sorry, could you repeat your first question, please? Sorry.
Yes, so I'm talking about risk C2 on page 287. What was the rationale behind the likelihood reducing from 4 to 3, given that cyber security risk appears to be a growing and more dangerous phenomenon that we are facing?
The recent internal audit report shows good assurance on that, so that is what I'm thinking. But I will get that clarified for you. I mean, top of my head, I can't remember that now. For the.
Thank you. I raise it because I really don't want the council to get complacent about cybersecurity risk, and downgrading it from red to amber doesn't feel right with me. That's why I raise it. My second question was whether we could please see what were the key learnings from the disaster recovery exercise in February?
From the recent disaster recovery they've done in February, they tested out everything, and let me get some notes. I think they successfully recovered its critical service following a simulated disruption. So that was one of the successful recovery, and the test provided assurance that the council's recovery arrangements are effective, and no significant issue were identified from that test happened in February. The learnings are, there are opportunities to improve, including enhancement to recovery documentation, application of dependencies, and post-recovery validation. So these all have been documented, and the teams are working on to improve those findings.
Thank you. I find that very reassuring. Thank you. Finally, page 291, risk C6, climate change. Two-part question. A new pathway to net zero was adopted as recently as November. Why has that not reduced the risk score? It's still showing as 12. And secondly, within that pathway to net zero, has the action plan to achieve net zero been fully costed, and have those costs been included in your medium-term financial plan?
To answer your first question about the why it's not reduced is, yes, it's a good progress. We made this net zero pathway. However, there are things outside of council's control. For an example, government fundings and changes they are going to bring in, or the technology-wise. So that is why we have not reduced the pathway. Is not guaranteed we are going to deliver that. So these changes can happen before that. So that is the reason it was kept to the same level, and we will review it, and if there's appropriate, we will reduce it when time comes. Second, fully costed, I would say no. We have a 100,000 budget in the MTFS to cover any net zero costing. So that is what we have in the budget for now. So it's mainly we are looking for any grants or any outside income for that to cover that cost. Thank you.
Great, thank you. Just to finish, from experience, I do recommend that this is costed and budgeted for, because the cost of achieving net zero can become quite significant.
Thank you, Stephen. Members, further questions of clarification? Councillor Horgan.
Thank you, Chair. Risk B3 on page 285, the inability to balance the Council's medium-term financial strategy. On the one hand, it's good to see that the risk has reduced from 20 to 8, especially with the background of, obviously, the major project at the bereavement centre, local government reorganisation, which we're all looking forward to. Not? Who said that? And obviously the fair funding review, maybe it should be recalled unfair funding review. I'm just trying to understand, what were the significant factors that gave you confidence, or the risk management group confidence, to reduce the risk from 20 to 8? What was the big changes that made you think, right, we can lower this risk now?
This risk is about balancing the medium-term financial strategy for the next 3 years. So, beginning of the year, we needed 2 million to balance the budget for third year. So that's a significant reduce after this surplus savings end of the year. So that's 3 million has helped us to reduce the balance significantly to balance the budget. So this is purely looking at the MTFS, balancing the MTFS. However, the bereavement centre and LGRR, there are separate risk in this same document, so that are addressed separately. Thank you.
So just checking my understanding, is what you're saying is, because of the good management of our finances, the future risks have been reduced, hence that's reflected now in a lower risk score. Is that correct?
That's correct.
Thank you very much.
Excuse
Stephen.
me, can I just, I'm seeing no change in risk score on that item. It's 8 to 8, but I'm probably looking at a different page.
If you go back.
No, it's fine. No problem at all. Any further questions, members? Would we like to move to the debate on this? In which case, the risk register, risk management update.
Yes.
You do wish to debate,
I know we
Stephen.
need to finish, but I just wanted to comment that the document seems to have had quite a thorough update in this iteration, and I called it out last time that hadn't happened, so I'm pleased to see that thorough update. Thank you. And secondly and finally, I note that almost across the whole board, the risks have reduced, which is great if that's right. I'm not sure what else I can say, but does that feel like we are in a less risky environment now than we were, say, 6 months ago? Is an open question, really.
Sorry, was that a question you wanted answered, or was that just a
It's a discussion point.
Sure, okay. Councillor Lay.
Chair, we might be at less risk because we've got more control. And I think that's the important part about it. Risk will go down if we control things better. And I think the one thing we've learned today is that we are more in command of where we are at this point in time. And I thank you for that.
Thank you, Councillor Lay. Any further points of discussion? In which case, the risk management updates for noting. Members contented to note the report? Lovely. The final item on our agenda item number 15, is the forward agenda plan. Because of the backstop date, which is the 31st of January 2027, I notified members of the committee by email that I am proposing to move the meeting, currently scheduled for 4:30 in this chamber on the 1st of February 2027, to the same time, same location on Tuesday, the 19th of January. Are there any objections?
Not an objection, Chair, but just a request that Democratic Services, assuming this is approved, email us ASAP so that I've got it in my diary.
Yep, no problem at all. Are there any other comments on the forward agenda plan? In which case, members, thank you very much for your attendance, and at 7:05, I declare the meeting closed.